Hello everyone, and thanks so much for joining me on today's lesson, which is our second session on our research theme, which is of course China and the global economy, for paper 3 on PreUEconomics. Okay, so today's lesson we're going to be focusing on how China restructured and remodeled its economy and began to grow very, very successfully in the model that it used. Now, it's important to note here that you will not want to spend much time when you actually sit the exam paper writing about this. What's important about these elements we are going to look at today, though, is how they have created today's economy as we see it, the problems that we see, as well as the successes that we see, which of course we'll have a look at in subsequent lessons. Okay, so let's get going. So China have used an extensive model of growth. Now this is really also known as catch-up growth. It's really about expanding the number of inputs of the land, labour, capital that are used to increase the quantity of outputs. So commonly used by LEDCs as they begin to catch up growth. So it's obviously things like allocating capital investment projects and improving infrastructure. It's reallocating labour from subsistence and working in agriculture to more productive manufacturing roles. So that's really what this extensive model catch-up growth helps show us, and of course it's something that we'll look at within the solo model later. So growth was deliberately unbalanced. They deliberately allocated around about 70% of the fiscal budget was allocated to 3 or 4 coastal regions. They focused on those coastal regions because of the opportunity they presented for trade. So that was the key reason there, and of course the fact that this was undertaken helped fuel the sort of migration that has taken place as people move to those coastal districts. Alright, so as we move on to our next point, we see reforms included special economic zones. Now those special economic zones allowed for the first time foreigners to invest in China. Now these reforms then facilitated inward FDI, foreign direct investment, into China and enabled the Chinese to benefit from technological and human capital transfers, as the Chinese managers were able to learn from the best industry practices that the Western firms were bringing with them. So this has really helped to elevate China's understanding of how to operate as a manufacturing-based economy at that time. Right, so looking at our next points, we can see how these points, the fact that this money is allocated to those 3 or 4 coastal regions, the fact that we had these special economic zones enabled China to build a specialisation and comparative advantage in early on low-end manufacturing. Now, of course, that comparative advantage has changed as the economy has become wealthier. It's no longer productive or profitable for the Chinese to really focus on low-end manufacturing. That's done elsewhere now. They now focus on more higher-end manufacturing, things like smartphones, manufacturing, assembling smartphones, medical equipment, CT, MRI scanners, of those sorts of products. So much higher value added. So the Chinese economy has become richer, and it's had to adapt as it has done so. Our final point is of course the state-led investment under a highly decentralised structure of government. So the government has of course allocated a lot of money to those regions, and then those regions have been managed in a very, very decentralised way, enabling those regional Communist Party members to decide exactly what infrastructure projects were needed, which firms should receive support, which firms shouldn't. And this again has helped to improve and facilitate growth further down the line. Now, this model, it's not perfect, but it has been extremely successful. It's led to all sorts of consequences that we'll see in a later lesson, but our next lesson is going to focus in on the successes that this deliberately unbalanced approach had. Okay, look forward to seeing you then. Thanks ever so much.